The Seattle housing market has rebounded from the lows reached a year ago, but can we expect prices to keep rising? With mortgage rates on the decline, homes are becoming more affordable, but will it be enough to keep fueling price increases? We're going to look at all that and more in today's regional market analysis. Let's get into it. According to the latest data from Redfin, which I have seasonally adjusted, the median home price in Seattle came in at $782,000 in December, which was 6.6% higher than the recent low of $733,000 back in March 2023. This was still 4.5% lower than the peak of $818,000 back in April 2022. The price increases have been taking place as mortgage rates have been on the decline. According to Freddie Mac, the average 30-year fixed-rate mortgage was at 6.7% as of January 25th, down from the peak of 7.8% at the end of October 2023. The drop in mortgage rates has definitely boosted demand. The sales-to-list price ratio has risen above 100 again, meaning that homes are selling above list price on average. To give you a sense of just how much of a difference that change in mortgage rates made over the last few months, let's take a look at an example. We'll use the median home price of $782,000, assume a 20% down payment, and the mortgage rate of 7.8% from last October. This would result in a monthly mortgage payment of $4,504. Now, if we left the price and down payment the same and just changed the mortgage rate to 6.7%, the monthly payment drops to $4,037. That decline of $467 can make a big difference, especially for a household on a tight budget. Unfortunately, however, even with the latest mortgage rate declines, affordability still remains a big problem. Here's a chart of the average housing payment as a percent of median household income. While it has come down some from the recent peak, it is still near record highs. Either prices or mortgage rates would need to come down much more to get affordability back to levels seen before the pandemic. In a recent video I did on the outlook for mortgage rates, I showed how we could see mortgage rates come down to 5% or lower by the end of the year if the Federal Reserve follows through on expected cuts to their Fed funds rate this year. That would be a big boost for housing demand, but might not be enough for most households because home prices are just so high. The current payment as a share of income is at 55.2% as of December, and even if mortgage rates were at 5%, this would only bring that share down to 47%, still way above pre-pandemic levels. Prices still need to come down notably to get the Seattle market back into balance, and that isn't likely anytime soon based on what's happening on the supply side of the market. New listings have started to tick up a bit, but are still at historically low levels. The month supply of homes, which measures how fast market inventory would be exhausted at the current pace of sales, is still trending lower from the recent peak. As mortgage rates come down, we could see more sellers listing their homes as they would feel more comfortable buying another home after the sale that doesn't come with an 8% mortgage rate, but we still have a long way to go to get back to a normal market. Home sales are still trending well below pre-pandemic levels with little sign of reversing course. Overall, I don't think we're going to see any big changes to the Seattle median home price in the first half of this year. With the tight supply and mortgage rates coming down to boost demand, there will be upward pressure on prices, so they could tick up a bit more, but I don't think they're going to go up too much because of how unaffordable Seattle homes are to the average buyer. That's where we are right now for the Seattle market. If you're in the Seattle area, let me know in the comments below where you think your local home prices are headed this year. And if you like this kind of housing market analysis, make sure you subscribe to the channel and hit that notification bell down below so you won't miss my next video. On this channel, I focus on forward-looking real estate analysis for the nation overall as well as regional markets. I also cover what's going on in the broader U.S. economy and what that means for the housing market. If you like this video, please don't forget to hit that thumbs up button on your way out to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.